Ladies and gentlemen, good day and welcome to the Triveni Engineering and Industries Limited Q1 FY22 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference, please signal an operator by pressing star then 0 on your touchtone telephone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rishabh Barar from CDR India. Thank you, and over to you, sir.
Thank you. Good day, everyone, and a warm welcome to all of you participating in the Triveni Engineering and Industries Limited Q1 FY22 earnings call. We have with us today on this call Mr. Tarun Sawhney, Vice Chairman and Managing Director, Mr. Suresh Taneja, Group CFO, Mr. Samir Sinha, President Sugar, as well as other members of the senior management team. Before we begin, I would like to mention that some statements made in today's discussion may be forward-looking in nature, and a statement to this effect has been included in the invite which was sent to everybody earlier. I would also like to emphasize that while this call is open to all invitees, it may not be broadcasted or reproduced in any form or manner. We will start this call with opening remarks from the management, following an interactive question and answer session. I would now request Mr. Tarun Sawhney to open the call. Over to you, sir.
Thank you very much. Good afternoon, ladies and gentlemen, and welcome to the Q1 fiscal 22 results for Triveni Engineering and Industries Limited. The overall performance of the company during the quarter has been quite satisfactory, especially in view of the challenges that have been posed by the second wave of COVID-19. For the company, while the sugar and distillery business have been less affected, the operations of the engineering business were prone to some supply chain disruptions and reduced availability of manpower at the contractor level, at subcontractor levels, etc. While the power transmission business was relatively less impacted, the operations at project sites of our water business were impacted because of the supply of labor and local lockdown restrictions. As a result, the gross revenue from operations of the company stood at 1,111 crores, a decline of 9%. The profit after tax, however, showed a growth of 10% and stood at 92.3 crores. A few highlights of our businesses. For our sugar business, the operations during the quarter were completely stable. The recent estimates for sugar season 2021 indicate a diversion of 2.1 million tons of sugar for ethanol production. While the push by the central government on the EBP program, it is estimated that next year we will see a diversion of 3.4 million tons of sugar approximately towards ethanol. And this is, of course, quite encouraging and very much in line with the planned target of EBP 20 by 2025, approximately. The estimated sugar production of the country stood at about 31 million tons for this sugar season. International sugar prices, of course, have continued their positive run and remained extremely buoyant and firm in view of deficit projections from around the world. On Friday, the number 11 contract ended at 20.52. That's raw sugar traded at 20.52 at the close, and white sugar traded at $514 per metric ton. Just to give you an example, at the very end of July, the similar numbers for raw sugar were 18.45, and for white, it was 4.74. This is the March 22 contract that I've just shared this data for. So there's been a substantial increase, and there's clearly a lot of concern about the availability of sugar across global markets and other challenges for the foreseeable future. And this does bode well, of course, for the domestic sugar market, which has seen a similar amount of buoyancy in domestic prices. I'm happy to report that the distillery segment showed extremely good promise and a revenue growth of 23% in Q1 fiscal 22. We're well on our way to set up the additional distillation capacities of 200 KLPD, which will be operational in the last quarter of this fiscal year. Our target, of course, is by the very beginning of Q4 of this fiscal year. So we will be able to capture some amount of production from our new two plants, 160 and 40 KLPD plants that will be coming up. The company is enthused by the central government's commitment to the EBP and the recent media reports with respect to ethanol-based flex engines, which are being tested, as we know, in Maharashtra. All of this is very encouraging for the ethanol industry and bodes very well for planned investments from across the country. The planned expansion of the balance 140 KLPD is expected, I'm happy to report, by summer of 22, and so that is expected at least 3 months in advance of what I had reported on the last earnings conference call. Turning to the engineering business, some of the highlights are that COVID-19 did have an impact. However, turnover was higher by 2%. There's a strong performance from the power transmission business, and the operations of the water business were impacted by COVID-19, and this is because of the disparate sites we operate at across the country and the paucity of manpower. The new capital works value, we received a new order for 170 crores for the water business, and we expect the order booking for the water business and power transmission to increase quite dramatically in the coming few quarters, primarily due to a buoyant market domestically and in international waters. The outstanding order book stood at 1,746 crores for the combined engineering businesses. Turning to the financial highlights, our revenues from operations declined by 9% and stood at 1,111 crores. However, the profit after tax, as I mentioned, was 10% higher at 92.3 crores, and the EPS rose from 3.38 in Q1 of fiscal 21 to 3.82 in fiscal 22. The tax incidence and effective tax rate for the company in this quarter under review is lower, as the company has opted for the lower tax rate under the new regime. The total debt on a standalone basis on the 30th of June stood at 1,074 crores, 14% lower as compared to the previous corresponding quarter. It comprised of just under 350 crores of term loans. The interest on these term loans, of course, is at subsidized rates or with subvention. The average cost of funds for the company had declined quite precipitously from the preceding corresponding quarter and stood at 5.27%, which is very encouraging and is reflected in our results. A more detailed review, let me talk about our sugar business. During the quarter under review, we crushed 1.64 million tons of cane at a gross recovery of 12.55%, producing 186,000 tons of sugar during this period, which is quite encouraging actually. And our total dispatches stood at 214,000 tons, which was substantially lower than the previous corresponding quarter, and due to the variances in the quota mechanism. As you know, the country is subject to a quota mechanism, which is decided by the Ministry of Food and declared on a monthly basis. And the quotas that northern millers have received over the past year have been lower than the previous year, and this is simply because the quantum of sugar available in other parts of the country has increased, and therefore there's been a natural balancing since it's on a proportionate basis that the quota is declared by the Government of India. During Q1, the sugar revenues and segment profits are lower, primarily due to the lower sugar sales of approximately 26%. Export subsidies of 57 crores pertaining to exports made in fiscal 21 were recognized in the quarter. And the recognition of export subsidies of 11.69 crores could not be made in this quarter. The sugar inventory on the 30th of June stood at 45.06 2.12 lakh quintals, and which is valued at 25.5 rupees per kilo. The cogeneration operations, which we now report as a combined, as part of the combined operations of the sugar business, achieved sales of 14.23 crores during Q1 fiscal 22, and this was slightly lower than 14.94 crores in the previous corresponding quarter. I'm very delighted to report that the company is one of the few farms that has absolutely no sugarcane arrears at this point in time. Looking at the industrial scenario, as per our estimates, the total acreage for sugarcane in the country is expected to increase to over 54.5 lakh hectares, approximately 3% higher than the previous sugar season. For sugar season 21-22, the production, as I mentioned, is going to be approximately 31 million tons. And this is very similar to this season's production. However, next year we're anticipating a higher diversion towards ethanol of 3.4 million tons of sugar versus 2.1 million tons of sugar for the sugar season ending 30th of September 2021. In the following sugar season 21-22, Uttar Pradesh is estimated to have a sugarcane acreage of approximately 23.12 lakh hectares, which is broadly speaking the same as the year that it's closing out just now. However, we do see that because of excellent rainfall and dispersed rainfall for the last few months, there are very strong possibilities of higher yields, especially in the areas where Triveni has its sugar factories. The sugar production is expected to be just under 12 million tons for season 21-22 in Uttar Pradesh. In Maharashtra, of course, it's expected to be just over 12 million tons. And Karnataka, we're anticipating a production of 4.9 million tons. So these are very encouraging numbers for the next year as well, and quite substantial. And it really points to the fact that we will need some form of export to take place. And therefore, the buoyant prices that we have in international markets are very encouraging to be able to absorb sugar. And we are seeing quantums of sugar already being absorbed under OGL. And I'm going to talk about that in a minute or two. This year, 7 million tons of contracts have been entered into. This is higher than the NAEQ of 6 million tons. And all the additional quantity is under OGL, as I was mentioning. With an opening balance on the 1st of October 20 of 10.7 million tons, if we look at the balance sheet for the country, the estimated domestic consumption is 26 million tons, with 7 million tons of export. Closing balance is anticipated at 8.7 million tons, which is approximately 2 million tons lower than the opening balance. Again, this is reflected in the present sugar prices that we're seeing across the country. For the marketing year 2021, ethanol contracts for 344 crore litres have been entered into. The ethanol manufactured from sugarcane juice and B-heavy molasses is anticipated at 230 crore litres, so a substantial portion coming from B-heavy and juice. And we see this trend only getting more aggressive towards B-heavy and juice as time goes by, and as the EBP levels start rising. This year, we're anticipating a blending just higher than 8% for the country, and next year, I think we're very much on target for having a 10% blend across the country, which is very encouraging, and that will be a record for the nation. Looking at international quotas, we've seen that major sugarcane producing regions of Brazil are facing some hurdles with respect to their sugarcane production and the preference for ethanol versus sugar. In addition to that, the drought that has been faced, which has been quite significant as far as Brazil is concerned, and potential frost impacts as well, have had a reduction in terms of the quantum of sugar that is estimated for production from Brazil, a fairly substantial reduction, and this has led to a fair amount of buoyancy in international prices. In Thailand, according to industry reports, local cane prices have risen quite substantially, However, there is a forecast for ample rains suggesting a recovery in Thailand for sugar season 21-22 after a very poor previous season. I think going forward, as far as international sugar prices are concerned, we're pretty much in uncharted waters. So it's very difficult to ascertain where these prices will be headed. But there are certainly big changes in demand supply, big changes in the quantums of sugarcane that are being produced and will be produced, and therefore it is a very exciting time for the global sugar trade. India will play a critical role in terms of meeting any deficits for sugar season 21-22. As far as the alcohol business is concerned, over the quarter under review, we produced 26,800 kiloliters, and we sold just a little higher quantity of 27,300 kiloliters at an average realization of just under 54 rupees per liter, 53.98. And as a result of our very high operating efficiencies, we've seen a substantial increase in our PBIT of this business quarter on quarter. During the current quarter, the company produced 75% ethanol through B-heavy molasses, which was compared to 48% for the corresponding quarter in the last fiscal year. The higher profitability in the current quarter is driven by higher sale volumes and higher realizations, and a very strong focus on cost control and operational efficiencies. The company has, under its alcohol beverages vertical, started producing Indian-made Indian liquor towards the very end of Q3 fiscal 21 at its bottling facility in Muzaffarnagar. This has continued quite well over the quarter under review and has substantially increased. We've seen substantial increases on monthly sales, and we see this new business for the company proceeding at a very healthy pace and growing at a very healthy pace. The company is also in process of expanding its distillation capacities. As I mentioned up front, we're looking at 200 KLPD coming up by January 22, and we're looking at the balance 160 KLPD coming up, 140 KLPD coming up by summer of 22, which was 3 months ahead of what we had forecast the last time that we had spoken. Looking quickly at our engineering businesses, I'd like to comment that our power transmission business has had a very successful quarter with a substantial increase in revenues and in profitability, and a handsome growth in our closing order book, which stood at 165.8 crores. During the quarter, the business did witness some supply chain disruptions, which are certainly normalized as we speak today. But despite that, we were able to increase our revenues. There were some orders that were actually pushed out into Q2, and so we are very well on track with respect to our budgeted numbers going forward and the catch-up that will happen in the following quarters. As far as the water business is concerned, the revenues fell slightly to just under 44 crores. However, the PBIT total increased due to project cost savings at all of our sites and stood at just under 6 crores. The closing order book stood at 1,580 crores, which was substantially higher than 912 crores when we spoke 3 months ago. This was for the quarter ending March 21. And of course, it was substantially higher than the previous corresponding quarter, where the number was 957 crores. The consolidated results include our wholly owned SPV executing the Mathura project under the NMCG, under the Namami Gange program. The second wave of COVID-19, which started towards the end of fiscal 21 and continued during the quarter, did have a substantial impact on our business, and we had to take precautionary steps to safeguard our manpower. And there were some disturbances in the supply chain at our vendors, and of course the reduced availability of labor and the non-supply of oxygen for industrial purposes. However, we see a lot of that getting ironed out in this quarter and of course going forward. And the hope, of course, is that we do not see a third wave, which could course, potentially have an impact on all industrial activity. Just very briefly, as far as the future projections of the sugar business and future highlights of the sugar business are concerned, the government has announced 20% ethanol blending. We're fairly certain that we will achieve 10%. As I had mentioned, this augurs very well for sugar-rated sugar companies like ours. We are well positioned to capitalize on this opportunity, and various new distillery expansions are on their way, and others are being contemplated by the company. We are also looking at incremental enhancement of our crushing capacities at very, very low levels of capex, and those projects are underway as we speak. And when we have some more details, we're happy to come back to you in terms of what kind of balancing we can do at very, very low levels of capital expenditure. The engineering business looks fairly solid when we look forward. Power transmission business has been focusing on business opportunities from defense, and we're looking at the conclusion of several tenders over the next couple of quarters, and we feel that we're well positioned in a lot of these tenders. We've seen strong economic recovery in fiscal 22, and this is primarily from demand from sectors such as steel, cement, oil and gas, thermal power plants, and fertilizer. And this bodes well for the PT business. On the water business, the company has participated in a very large number of tenders, which are, as I mentioned earlier, in increasingly final stages of completion. We have won a substantial tender recently, and we look forward to positive results out of the many tenders that we participated in. And again, the renewed focus on the water infrastructure and water map of the nation by the central and state governments augurs very well for our water business. Thank you very much, ladies and gentlemen. I'd like to open the floor to questions.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may enter star and 1 on their touchtone telephone. If your questions have been answered and you wish to withdraw yourself from the queue, you may enter star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have the first question from the line of Shanti Patel from Shanti Patel Investment Advisors. Please go ahead.
Sir, my question is, what you are thinking about realization per kg in quarter 2 and quarter 3 and quarter 4 of this accounting year? And what will be the scenario of ethanol as far as the industry is concerned and our company is concerned in terms of profitability?
Okay. Well, let me take the second part of your question first. I'm afraid we don't really give any forward-looking projections for profitability. However, in terms of quantums, we see a higher in the upcoming sugar season. We see a substantially higher quantity of diversion towards ethanol. We will be operating our new distillery at Muzaffarnagar when it's commissioned in January of 22 on sugarcane juice and syrup, on sugarcane syrup, and therefore we're seeing a larger quantum of cane being diverted towards ethanol for the company. Of course, the profitability numbers are dependent on the announcement of the new ethanol prices and of course on sugarcane prices, and therefore it's impossible to give you a projection of profitability. With respect to sugar prices over this quarter and the next 2 quarters of this fiscal year, sugar prices have gone up a fair amount over the last 15 to 20 days. We've seen sulfitation sugar, which is approximately just over 50% of the sugar that is produced by Triveni, trading at 36 rupees per kilo as of today, and refined sugar a rupee higher at 37 rupees per kilo. Frankly speaking, if these levels are maintained for the remainder of the year, I think that would be a very successful outcome and balance of government policy and our export program. It's important to mention that we do need to have sugar exported to international markets because we are going to be producing about 31 million tons of sugar next year, with consumption this year at 26 million, next year perhaps maybe 500,000 tons higher. and so we will have a substantial amount of excess sugar. Plus, you must remember that Triveni's projection for our closing balance is at 8.7 million tons, which is certainly higher than 2 months consumption, which is what we, and I've said in the past also, what we typically need at the end of any sugar year. And therefore, we have substantial excess sugar in the country, and if we are able to evacuate this sugar into international waters and export the sugar, then we should be able to maintain the prices that we're seeing at this level. So there's a lot of contingency, there are lots of ifs, but my personal perspective is that we should be able to maintain the sugar prices that we have seen and the levels that we have today for the remainder of this year.
Oh, thank you, sir. Thank you very much.
Thank you. We have the next question from the line of Ashutosh Chaubey from Sentra Advisors LLP. Please go ahead.
Hello. Thank you for the opportunity. Yeah, I just have questions regarding the guidance with respect to what will be the cane crushing that is expected in the company this year.
Well, the sugar year is very different to the fiscal year, because the sugar year and the season runs from October through to May. So it's not it's not a number that we typically give a advanced estimate towards. It's also very difficult for us to do this because we still have rains and weather conditions that we need to see in the remainder of August and September, which is the monsoon period, which is absolutely vital for sugarcane growth and the grand growth period of the crop. The hope is that with the amount of work that we have done, if we do not have any unpredictable weather conditions, we should be able to see an improvement in our yield. We've had a small improvement in terms of area under cane for Triveni. I'm happy to report we've seen a single-digit growth in area under cane for the company, and we hope to see some increase in yield. Of course, that is contingent on a variety of other factors, so it's impossible for us to even estimate that at this particular point in time. We'll be in a much better condition to provide you with more information on this subject when we speak next in 3 months.
Okay, sure, understood. I have another question with respect to the similarly on the cane crushing, but like you said, the new distillery capacity would be functioning in January FY22, right? I just need to know that out of the entire distillery capacity, how are we going to go about it? Let's say what percentage would be from B heavy molasses, what percentage would be from C and etc. sugarcane juice, right?
So, a lot of it is contingent on when the new distillery capacities come up, and of course, there will be 40 KLPD of the new distillery capacity that's coming up that will operate on grain. So it's a blend of 4 different feedstocks. We will have C molasses, and this typically comes from our factories in East UP, where we don't have a distillery. It also meets the requirement of country liquor, which is required by the UP state government. The other factories in Western and Central Uttar Pradesh will be focusing primarily on B heavy, and of course we will have juice that we will have at our factory in Millet Narayanpur, and we will have grain at the 40 KLPD plant in Muzaffarnagar. So it is a balance. If you contact us offline, we can share with you some numbers in terms of what will be the percentages of all 4.
Sure. Okay, then I'll take it offline. Thank you. That'll be all.
Thank you. We have the next question from the line of Karan Agarwal from Tusk Investment. Please go ahead.
Hello, hi. Am I audible?
Mr. Agarwal, do we need to adjust the audio from your line?
Yeah, hold on. Hello, is this better?
Yes, please go ahead.
Yeah, thank you for taking my question. So my question was around the international sugar prices. Considering that the prices have now shot up to more than 20 cents per pound. So my question is that will we be able to liquidate our inventory at price? I mean, we enter into, say, future contracts for later date and then liquidate our inventory? Because as you mentioned, India is just sugar surplus country. So the rise in sugar prices is a good opportunity for us to liquidate our excess inventory. I would like your comments on that.
Yeah, absolutely. So, firstly, while there has been an increase in international sugar prices, they are lower than domestic prices. So there's no reason for liquidating sugar from Triveni, where our factories are landlocked. They're all in the state of Uttar Pradesh, and export our sugar internationally. There is a delta in our favor for sale domestically, a substantial one. The second thing is that under OGL, you have the ability to be able to export that sugar. So the question that you ask is more relevant for factories from coastal states, from Karnataka, from Maharashtra. And we've seen 1 million tons, and we're projecting 1 million tons of OGL export this year, or up to 1 million tons of OGL export for this sugar year. Going into the next year, I think that certainly will happen. There will be a requirement for some form of assistance from the government of India, certainly, and I know that it is being contemplated as we speak, the quantum of which is completely unknown. But there will be firms that are cash-strapped that will utilize this opportunity to be able to evacuate some quantity of their sugar. I don't see that as a possibility at this point in time with current prices for Triveni.
Okay, could you please repeat what are the sugar prices right now? Is it 36?
The current domestic prices are 36 rupees for plantation white sugar and 37 rupees for refined sugar for Triveni. That may be different for other groups.
Yeah, okay. Thank you so much. And my next question was, I was going through your investor presentation where you mentioned that you're working on a new variety of seed to reduce dependence on the 0328 variety, which everyone in the industry uses. So could you comment on the development?
We have developed a structured program, a 3-year program for significantly reducing the dependence on 0238. We have identified the varieties and we are already working on this substitution for the past year, and we are happy that we have reduced that dependence by at least 7-8% in the coming year, which will significantly get enhanced in the next 2 years. We have identified a variety which is already being planted and also an upcoming variety. I would not be in a position to divulge the varietal percentages or the names of the varieties for obvious competitive reasons. You will understand that.
Yeah. So is the new seed more profitable to grow, as in the yields are higher?
The answer is that the farmer also knows that some diseases are getting observed in 0238. He's also aware of that. And the new varieties give him similar yields and recoveries. And the absolutely new variety which I just mentioned to you, which is under observation in our nurseries, etc., may give us a higher recovery even than 0238.
Thank you so much for answering my question. I'll get back in the queue.
Thank you. We have the next question from the line of Rajesh Majumdar from B&K Securities. Please go ahead.
Sir, and thanks for taking my call. So I had a few questions on the sugar business as well as the industry. My first question was on the cane crushing. So we've seen a 24% kind of decline in 1Q. Is that due to some kind of crop patterns or red rot or anything like that, or is just due to the lockdown?
No, it was because that's the fag end of the season. So, you should look at the entire sugar year as it's in its entirety, which stretches from October through to May. The previous sugar season was a longer sugar season. There was more cane that was available. The last sugar season that has just completed in May of this year had a lower crush. But the comparison for quarter on quarter, while those are absolute numbers and we've represented them, is not significant for the full sugar season and the difference in crush of the entire sugar season. You should also note that for sugar season 2021, which is just completed, we did start our sugar factories earlier than we did in the previous sugar year.
Right. So there is no, or like we saw in Eastern UP in terms of the red rot and on the Western UP mills. Can we take it that way?
No, that is absolutely correct. And we have a mill in eastern Uttar Pradesh where we did see a decline in terms of the crush. However, the incidence of red rot, even in out of our 7 factories, 1 is in East Uttar Pradesh. And our factory in East Uttar Pradesh did not see a significant amount of red rot or incidence of red rot. I would also like to mention, you didn't ask it, but since you're asking about red rot, for this year, we have seen no incidence of red rot in central and western Uttar Pradesh. And in East UP, the incidence is minute. So there's absolutely negligible amount this year, and that's because of very stringent control over seed and over cane development by the teams at Triveni.
Right. So my second question was regarding the area and the cultivation. We have not seen much consolidation in the industry, and the largest player has just 4% market share. So while there's so many standalone sugar mills who really don't have the wherewithal to expand into distillery business, is there not any opportunity in terms of increasing our cane acreage by taking over these mills?
Your question is an economics-based question. Everything has a price to it. So, and a return to it. So I'm not in a position to be able to comment because each mill is different. The area of each mill is different. But the ecosystem is such that I think that with the focus on ethanol and the focus on biofuels that's happening and the recognition that that is being received through public markets and equity markets, I think we're coming to some sort of point where we could see potentially some consolidation in the years to come. However, I would say that we are dependent on government policies for enormous impacts on the profitability of the industry. And if we see the impact of policy reducing, I think that will augur very, very well for consolidation in the industry, which definitely needs to happen. You've raised a very important point with over 500 sugar factories in the country and so many different people operating, so many different companies operating single units across the country. There should certainly be scope for consolidation. There should certainly be scope for efficiencies that come through consolidation as well.
Right. So will we move to that eventually over a longer period of time, you think? Some more consolidation in the industry?
You'll have to, I think it's very difficult to tell. As I mentioned, some of it is contingent on government policy, and that clearly, of course, is not in our hands. But the government has, I should mention, been very supportive of the industry, both the Uttar Pradesh government and the central government, in terms of recognizing what the areas of concern are and recognizing the areas where a push can be given. For example, the entire ethanol sector.
Right. And so my other question was regarding the sugar prices, which some people have been asking. So given the fact that international prices have risen in a traditionally weak quarter where there is no sowing for us, how much realistically can the industry export without sacrificing in terms of price to get the real benefit of this? Because we are going into next season, so it's just about 2 months left. So and the prices, we don't know whether it will hold or not till that time. So how much can the exports realistically increase in this short time frame, given the fact that domestic quotas have also to be fulfilled and inventory position is already quite low?
Right. You should note that domestic quota is a guided quantity of the maximum that you can sell. You can certainly sell less than what you're allotted. And the next thing is that there is a price difference for domestically traded sugar. Classically, in Uttar Pradesh, you get a 2 rupee per kilo premium over Maharashtra. And therefore, Maharashtra prices are closer to internationally traded prices. And there can be spot premium. Everything is traded on the tape. Not everything is traded at international prices. Sometimes destination sugar can be traded at a premium if there's any demand. And so Maharashtra millers could certainly find opportunities for exporting their sugar. However, I will say that there is an anticipated increase in FRP for next year's sugar that is coming right now. And I think a lot of people will be a little cautious and cautiously optimistic, but cautious nonetheless in terms of placing unrestricted orders for export. So we'll see a balance. I think that quite a lot of sugar can be exported, but it will certainly need some amount of government assistance that we've got this year and the previous year in terms of the MAEQ and the previous MIEQ subsidies from GOI.
Right. So that brings us to my one last question. It's just add-on question, and this just the last add-on question. So my add-on question was that given the fact that we have seen a year where there has been unusual conditions in Brazil, which has exacerbated the international pricing scenario, and we are moving to say next year where things could normalize, and in which case the government of India also has a target of cutting the export subsidy to zero over a period of time as per the WTO regulations. So for a longer time frame, if you look at the overall diversion to ethanol, it can be maximum 6 million tons or something like that. So if we increase the cane price and additional acreage in the sugarcane comes in, say, over the next 2 years, then the industry will again go back into a 10-11 million ton kind of scenario is what I am trying to gauge at.
I'm sorry, you're going to have to repeat that question. You tailed off towards the end. Is your question? Yeah, just repeat it.
Yeah, my question, sir, that this year we have an unusual weather conditions in Brazil, which has exacerbated the overall demand-supply scenario globally. And it has coincided with the fact that we also have some additional sugar diversion in India. However, going into sugar year, say, 22-23 and beyond, and given the fact that cane pricing will increase with additional area under cultivation, will we again see things normalize back to what we have seen earlier? Because as per the WTO regulations, India cannot go back to the subsidy levels that it had enjoyed earlier, say 10 rupees plus. So, I mean, it's
your question. So you see what your argument is. There are 4 or 5 things that you need to consider. The first thing is the quantum of ethanol and where you're getting the ethanol from. You threw out a number of 6 million tons of diversion. Well, 6 million tons of diversion, it can certainly be higher. It can also be lower at the end of the day. It's dependent on what comes from grain and what comes from sugarcane, juice, etc., from sugar factories. So those numbers can also change. The numbers that you're talking about are government reports that have been talked about, and those are the approximate numbers in coming up with one scenario. There can be many other such scenarios. You are correct that the government of India subsidies will have to end, and that we have just over a year for that compliance. However, we do have the opportunity for diverting more sugarcane or excess quantities of sugarcane towards the ethanol blending program. Next, you mentioned sugarcane prices. Yes, they may go up, but there's no necessity for them to go up continuously over periods of time. In fact, there's been increasing debate to have some mechanisms in place by the central government in terms of linkage and bringing about linkage. And the hope, of course, is that when you do have compliance with WTO regulations, it is met with a linkage of some form to ensure that all constituents in this value chain, farmer, factory, consumer, all have an equal benefit coming out of the system. So that's another point. Then you also mentioned that increasing acreage. Well, acreage goes up and down by a few percentage points. I mean, land in India is fairly limited. So I see any increase coming only from increases in yield per hectare, which of course has its own challenges because you have smaller and smaller plot sizes across the country. But the total quantum of area under cane is not going to suddenly increase by 20, 30%. That's not going to happen.
Thank you. Before we move to the next question, we would like to request participants to limit their questions to 2 during the initial round. We have the next question from the line of Kaustubh Pawaskar from Sharekhan by BNP Paribas. Please go ahead.
Yeah, good afternoon, sir. Thanks for giving me the opportunity. I have 2 questions. One on your consolidated debt. So it stands now at around 1,000 126 crores. So do you expect it to reduce by end of this fiscal, considering your capex program, ongoing capex program?
Yeah, as far as the debt is concerned, in respect to the new distilleries which are coming up, we'll be contracting another 160 to 170 crores. So therefore, the total debt as on 31st March 22 may not come down.
Okay, got your point. And so with now 200 KLPD coming up by the end of this fiscal, and another 140 coming by FY23. So can we expect the ethanol production to be around 13 to 14 crores for FY22 and around 17 to 18 crores by 23?
Good question that you've asked. Yes, of course, the ethanol production will be higher. We will see for this year, because we're only going to get less than a quarter for the 200 KLPD that is coming up. We will see about 12.5 crores. So just about approximately for this year. And next year, we will see somewhere between 19 to 20 crore liters.
Thank you. We have the next question from the line Sanjay Manyal from ICICI Securities. Please go ahead.
Hi, sir. Just a few questions. One is specifically on the
Mr.
exports.
Manyal, I'm sorry to interrupt, but the audio is not clear from your line, sir.
Can you hear me?
Yes, it's better now.
Yes.
Thank you.
Yeah, just a few things about the exports specifically. If I'm not wrong, you're still about to export approximately 35 to 40,000 tons for this sugar season?
No, we've exported our entire quota that we have received from the Government of India. It's already committed and all exported. There is some subsidy of 11 odd crores that we are yet to receive, which will happen, which is happening in this quarter.
Yeah, and given the prices, the white sugar prices are about $500 per ton, so it translates somewhere around 38 rupees in terms of the current prices. And given the fact that you have a sufficient sugar production this year, and which probably, according to domestic quota, you probably exhausted inventory only by January. So is it not viable to sort of contract exports for the March contracts?
So let me just say that no, it's not from Uttar Pradesh. I just answered the same question. The prices that you're referring to for the number 5 contract, for the London contract, are for EC grade sugar, 45 Ekumsa sugar, and it's also FOB. These are not ex-factory rail prices. So there is a quantum of transportation and handling that needs to be also deducted from these prices to be able to get an apples-to-apples comparison. So right now, there is no parity. As I had mentioned, domestic prices for Triveni are higher than what the March contract has right now. Anything can happen. What we've seen over the last 2 weeks, and that's why I've given the comparison of pricing, is that domestic prices have gone in line with export prices, even more so of late. So if there is a further bump up, I'm fairly confident it will be reflected immediately in domestic prices.
Thank you. Before we move to the next question, we would like to request participants to limit their questions to one during the initial round. We have the next question from the line of Ajay Jain, an investor. Please go ahead.
Yeah, good set of numbers, sir. My query is, now that we know that in sugar season 21-22, moving forward, the opening stock would be 10. Does that mean that we have, there was an increase in production from 1920 to 2021 sugar by about 15 to 20%? Does that mean that it has been consumed totally? And there was a query about, the cooperative societies not completing their unsold quota. Can you please explain this part of it, sir?
So let me take the second part of your question. If any of the cooperative sugar mills or government sugar factories don't complete their quota, I can't comment on why they haven't. They may have a different strategy, different sales strategy, etc. Frankly speaking, if they hadn't and they have stock, it's selling at a higher price, so they've done very well, frankly speaking. It can't automatically be allocated to the private sector just because one sector is not completing it. That does not exist. That mechanism does not exist right now, but I cannot comment on why they didn't complete. I'm sorry, you'll have to rephrase what your first question was. I didn't quite follow what your first question was.
There was an increase in production from sugar season 1920 to 2021 by about 15 to 20% overall. Has that been used up, or you think the stock is much more than the 10 which we are projecting for sugar season 21-22?
Well, for sugar season 21-22, we're projecting 8.7 million, so even lower. We don't think that there is hidden stock. I think your question alludes to, is there hidden stock in the country because of X whatever production? I do not believe that to be the case at all. I believe the government's reported data, the industry's reported data is extremely accurate.
Thank you. We have the next question from the line of Harsh Gupta, an investor. Please go ahead.
Congratulations on a great set of numbers. Actually, the first question that I have is basically in the distillery business, in the investor presentation, there's a difference between the revenue and the net revenue of about 50 odd crores. This was not the case in the last year. So is there any reason this has come up?
I think this would allude to the state excise duties on the country liquor that we are manufacturing and selling over there. That would get reported in that number. I think you're referring to the number between 152 crores and the 227 crores. Is that what you're referring to?
Yes. That's the exact number.
Right.
Thank you. We have the next question from the line of Sanjay Manyal from ICICI Securities. Please go ahead.
Continuing the question, my last question. You believe that probably the domestic prices will prevail at 36, 37 rupees for the entire year? Because what I understand that still at these prices you will be only able to sell the limited quantities, which is the domestic quota. And given the fact that most of the millers probably will be thinking this way, then probably export may not happen to the quantities which we are required to sort of evacuate, say 6-7 million ton next year.
So I'm sorry, your connection is a bit poor. But I think from what you're asking is, will the export happen next year? So I think that the export subsidy is being contemplated at GOI. I don't know what it will be. It's very hard to tell. But it's clear that all parties concerned know that a substantial quantity of sugar needs to be evacuated next year. Now, just because 1 million tons or a part of 1 million tons has gone under OGL, it's only gone from some coastal millers and those that have found immediate opportunity. It doesn't mean that sugar can get exported just under OGL next year. There may be isolated opportunities, etc. But you do need some sort of sustained and a planned export strategy, because to evacuate several million tons of sugar, so let's say 6 million tons for next year, you need a vast quantity of time as well. It needs a huge amount of planning. It's not as if 6 million tons can go out in 1 month all of a sudden. We don't have that kind of port handling capacity, as you're aware of. I do believe that domestic prices at this point in time are very robust, and they will remain so robust if we've got especially high prices prevailing in international markets. And so the quantum of sugar being exported under OGL from North India is going to be nothing, because you do have that delta that is prevalent in North India.
Okay. So just one thing about the sugarcane crushing thing, which you have mentioned that you are probably contemplating an increase in capacity. So is it that the sacrifice which we are assuming that we'll go for the ethanol diversion may not be as high as probably we were expecting earlier?
I'm sorry, your connection is very poor, so we're not getting the accurate thing. But you talked about sugarcane crushing capacity. Any increase in our crushing capacity will be through very tiny, small capexes, and it's really balancing capex. The other thing that you should remember is that when we're producing juice or syrup, we will be able to pass through more cane at some of those factories which have associated distilleries and get that benefit as well.
Sure. Thank you. I'll ask other questions offline.
Thank you.
Thank you. We have the next question from the line of Udit Gupta, an investor. Please go ahead.
Good afternoon, sir. So my question is that, sir, after this expansion is complete in January or February, so what will be our capacity for ethanol?
Yeah, so our present capacity is 320 KLPD. We have 200 KLPD coming online in January of 22, taking us to 520 KLPD. And we have a further 140 KLPD coming along by summer 22, taking our capacities up to 660 KLPD.
So I was talking in terms of liters, sir, like after the first phase and the second phase, so how many liters can we expect?
You operate 335 days, 330 to 335 days. You can just do the arithmetic.
I get it, sir. And sir, for the grain-based distilleries, sir, what is sir, is the profitability much lower than from molasses, or sir, like how does it work out?
No, I won't agree with you that the profitability is lower. If I had to prioritize based on the current pricing mechanism, I would say that it is B heavy, followed by grain, followed by cane juice. That would be the way. And it's all at least grain and B heavy are quite near to each other in terms of the profitabilities as of now.
Thank you so much.
Thank you. We have the next question from the line of Ritika Gupta, an investor. Please go ahead.
Hi, sir. Good afternoon. My question is pertaining to the engineering business. So in the gears business, we did 53 crores of revenue in Q1. Do we expect this run rate to continue or improve in the balance part of the year?
You know, we don't give forward-looking statements in terms of our revenue projections. But in general, I can say that we have a very healthy order book. And the order book is increasing, and the demand for our power transmission products for this year is certainly higher because, you know, there's a huge backlog of orders that have come through from the preceding 12 months, and customers are, awaiting a large number of gearboxes and other associated products during this fiscal year.
So our order book has actually been range bound in around 150 to 160 crores for the last couple of years. Do we expect this to improve significantly this year?
Yes, we do expect it to improve quite significantly this year.
And what are sustainable margins for the power transmission business? Like this quarter was an exception, I believe.
Well, I think, of course, you cannot take any one particular quarter. Yeah. I would encourage you to look at fiscal averages going back 4, 5, 6 years for our power transmission business.
So about 25-26%?
We've maintained a fairly consistent PBIT average, and we anticipate that can certainly be maintained going forward.
Okay. And pertaining to the water business, so when do we expect, like, again, revenues have been pretty muted, but the order book has been strong for the last couple of years. So when do we expect revenues to, say, cross 500 crores by?
I can't give you an answer to 500 crores. A lot of it is dependent on execution, what we have in hand. But we are seeing more tenders coming to execution. And if we win those tenders, you will see that reflected in our revenues and in our quarterly numbers. Frankly speaking, there has been a paucity in the number of contracts that have been finalized by municipal authorities and state governments and the central government as well. And of course, we've dealt with 2 major lockdowns across the nation. And as you can imagine, infrastructure projects get impacted first because of supply chain issues and because of labor shortages and scarcity.
Thank you. We have the next question from the line of Ashwin Motwani, an investor. Please go ahead.
Yeah, hi. Thanks for taking my question. Am I audible?
Yes, you are.
Yeah, thank you. Just wanted to understand the cogen business. Are we I believe it's not been shown separately as a segment revenue. So if you just show what is the realization and what is the quantum that you've done.
You see, with the tariffs having come down, we are not really focusing entirely on the cogen and trying for longish seasons, etc. And therefore, the cogen, the philosophy is that the moment the sugar factories close down, our cogen operations also cease to happen after that.
And it's also important to mention that the tax holidays that we received, the ATI benefit that we have received is no longer available for any of our cogeneration plants.
Thank you. We have the next question from the line of Anupam Goswami from B&K Securities. Please go ahead.
So my first question is on a little bookkeeping. In the last presentation, I found that your distillery realization is 57, that is Q4, whereas in Q1, your distillery realization has gone down to 53. Where is that gap coming from?
You see, the gap is coming from because we are also producing ENA in one of our distilleries, wherein the rates are reasonably, I would say, quote unquote, controlled over there, and therefore that brings down the realization for that quarter.
Thank you. Ladies and gentlemen, that was the last question, and we will now close the question queue. I would like to hand the conference over to the management for closing comments. Please go ahead, sir.
Ladies and gentlemen, thank you very much for joining us today for the Q1 fiscal 22 results for Triveni Engineering and Industries Limited, where the company is positioned quite attractively across our various business segments. I think we're in a unique opportunity to take advantage of the changes that are happening in India today, the changes in policies that are happening in India today. It's a very exciting time. I look forward to speaking to you in 3 months' time, at which point the sugar season will be underway, and we will have quite a lot to talk about on that, and hopefully we will also have more positive news to share with you on our engineering business as well. Thank you again, and have a good day.
Thank you, gentlemen. Ladies and gentlemen, on behalf of Triveni Engineering and Industries Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.